What's up, everyone? It's Karthik with MoneyVest, and here we are for another Monday morning live stream. I don't know how long I'm going to be live for, maybe 15, 20 minutes, maybe an hour, maybe a few hours. I don't know. I have no plans for how long I'm going to be live, but I figured, just do a live stream, talk to you guys as this market is brutal or selling off quite a bit. Volatility is back above 24 right now, so we're up another 11.7, almost 12% at the moment. And of course, a lot of individual stocks are just straight up lower. We got the Nvidia, stock down over 4%, trading down to $105. We got Tesla down almost 6%, trading back under 250, and we've got QQQs down about 1.5% after the brutal Friday. The selling pressure continues, and we got the S&P 500 also lower by 1% pre-market. So if you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and the video is working well. And definitely do invite more people. Share this live stream with other investors and traders that you think can benefit from this live stream from this this Monday morning sell-off that we're seeing. So definitely do me a favor. Drop a like, subscribe if you haven't already, and share this live stream so we can have more and more people join us. Okay, let's do this. Let's deploy some more. Hi, Caddy. Thanks for the live support session. Loud and clear from Texas. Perfect. Welcome on board. So Tom Lee was on CNBC earlier, about 30 to 40 minutes ago. I'm going to play the clip on what he said. Once again, market looking for a bottom this week is what he talked about. And then I've got a lot of really interesting pieces of nuggets and information to share for all of us. This is going to be a little bit more educational so that you can take this and it's going to benefit you over the long term. As investors, as traders, it's going to really, really be super valuable for everyone. So once again, just drop a like, subscribe, and I'm going to do one more thing here. I was sharing, a couple different things in our Discord earlier, including a video from Peter Lynch, which I think is very, very important. It's very valuable information. So, okay, here we are. We got volatility back over 24 right now, 11.6%. We've got the yields also dropping. So we've got the 10-year treasury sitting at under 4.2%. Bitcoin prices are also selling off for just a little bit over $82,000. And the MoneyVest index is most likely going to open around 2.6, 2.65. That's my pre-market, pre-calculated number. Of course, when the market opens, we're going to get the live reading. But my expectations are we're going to be somewhere around 2.6, 2.65 for the MoneyVest index, which has obviously been rolling over once again. We got up to as high as 3.1, 3.2 very briefly. And now we're starting to see that rotation back lower. And the lowest point was on March 13th. We got up to as low as 2.51, 2.52 before bouncing right back up. Okay, let me just come over to our chat. And here we go. Robinhood notifications are blowing up. Jeremy says, is the yen carry trade part duo? So yeah, there's some concerns that there's another reverse carry trade happening, which is causing a lot of problems and volatility in the market. But I think primarily this is a lot of uncertainty related to the tariffs, the growth scare. Markets in general want to be a little bit more risk averse, right? So the risk appetite for the entire market is no longer present at this moment. And some of the best metrics to look at for that is, if you take a look at gold prices, we are, hitting fresh new all-time highs. In fact, we are at over $3,120 per ounce. This is insanity, right? Gold is hitting a brand new all-time high. Up until last week, I did a video on this. What was the Friday's market update? I talked about gold prices at under 3,100. So we were around 3,080, 3,060. But just take a look at the last 3 days. It's gone from $3,000 to now sitting at well over 3,120, right? So this is a 3.6% increase in the last 3 days alone. Not to mention, since the beginning of 2025, gold prices have rallied almost 20%, right? And I've done several videos. I've even done videos in 2025. There's a lot of central banks now piling into gold because they want a safe haven, an asset that is going to hold its value if this devaluation of the currency continues, if there is more and more inflation, if there is high levels of printing and money supply, gold is where people go to if there is any kind of geopolitics or any kind of global trade wars. A lot of concerns that investors have from all over the world, right, in terms of economic policy and just overall monetary policy in the world. And so 3120, right, just brand new all-time highs, incredible momentum. And another chart is gold divided by SPY, which shows you clearly the breakouts that we're seeing in gold relative to the S&P 500. So this is the significant outperformance since November of 2024. Gold prices have outperformed by 30% against the S&P 500. And even better, gold divided by QQQs is going to be an even stronger outperformance of over 34%, given that technology stocks have sold off significantly in relation to gold in this chart that I'm going over. So let's listen in on what Tom Lee has to say. We've got almost 100 people watching, so definitely drop a like, subscribe, share this live stream with other members, traders, other people that may want to join us. But let's listen in to what Tom Lee has to say about the markets for this week. This literally came out about 45 minutes ago. So we're going to listen in. It's a 6-minute clip, and then we will discuss. Okay, I'm going to play this now.
As well as a CNBC contributor. At the time, I think you were talking about some of the people that work in your shop too, some of the technical people, and you were of the view that we were at least close to making a bottom. And off camera, we were talking, I said, maybe in terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the SP was down about 6%. Now, looks like it's going to be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces
buy,
for
though,
bottom.
into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. Brexit happened, and the UK economy emerged okay. It didn't have a huge recession, and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully they're not doing it the same, cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have of at least giving a head fake that maybe it's still around, and you throw in tariffs. I just heard what Goldman Sachs say, a 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
Yes, and I think we'll have a glimpse of what Fed Chair Powell's thinking because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to put a reversal of markets here, but I think investors are a little too scared heading into winter.
Bitcoin's testing recent near-term lows, I guess, again. It's been under 80. It's not quite there yet. It definitely is a risk-off trade, and when the NASDAQ goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so.
You do at 80.
Yeah, I think part of this was Bitcoin seasonally was just not going to be attractive until after March ends, and now we're finally exiting March, and so I think not only is the calendar looking better, but as you're saying, the Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year.
Right. People love it when I ask you what your year-end target is on Bitcoin.
Yeah,
it makes people very excited.
Yes, and I mean,
it's crazy high again.
I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
Do you agree with what Larry Fink said just about the idea that the dollar could suffer as a result?
They want it.
Bitcoin, yeah.
Yes, I mean, I'd say that Washington understands that too. That's why stablecoin.
All right, so that was Tom Lee sharing his insights. This was 45 minutes ago, talking about the market showing a lot of signs of a potential bottom this week. And if you want a good laugh, definitely go to the comments and read the comments, because it definitely gives good perspective on things. And I really want to address certain things because I think it's going to help everybody watching this video to kind of have a right mindset of how to approach investing. And so, you'll for members who've been part of the channel, you've heard me say this many times. I've said this like multiple times on almost every video. I've talked about this, that predictions are useless, right? Making predictions is incredible amounts of waste of time. And I'm going to show you one more thing, right, from Peter Lynch that is going to drive the point home. It's also going to give you a little bit of perspective. So I'm just going to play that clip now.
Particular company. Yeah. If we're in a recession, people are not going to spend as much money on going to the movies or whatever they do.
Right.
And therefore, you got to pay attention to these other things because they impact on earnings.
They are very important, but you have no idea of knowing what they're going to do. Alan Greenspan's the head of the Federal Reserve.
Right.
He cannot predict interest rates.
Yes.
He'd be the first to
He
tell
can
you.
influence them, but he can't predict them.
He cannot predict what long-term interest rates are going to be 1 year from now, 2 years from now, 3 years. He's even surprised how low they are now.
Right.
So how am I supposed to predict interest rates? How am I supposed to predict the economy? You certainly remember the recession of 82.
Yes.
1982, we had a 20% prime rate, 14% unemployment, 12% inflation. I don't remember anybody telling me in 1980 or 81 that was going to happen. All of a sudden, we had the worst recession since the Depression. I didn't read about it in the paper. So it's crazy to think about these things.
Here's a quote from you. I own Dunkin' Donuts. When you own Dunkin' Donuts, you don't have to worry about Korean imports. You don't have to worry about M2 or M3. These are money supply figures,
Right.
aren't they?
Yep.
And what's happening to the money supply? This is the way you make money. If you don't understand what the company does, you should not be in it. If you could predict the stock market, you could predict the economy, you could predict interest rates. If you go buy the wrong stocks, you're going to lose half your money anyway.
Right. I'm saying people have natural advantages.
Yeah.
Let's say what you do for a living is you're involved in the restaurant industry.
So I highly recommend you guys check out this entire video because I think it's going to be very, very eye-opening and things that really matter when it comes to long-term investing. And, you know, the unfortunate thing is, look, I have a lot of respect for Tom Lee. I have a lot of respect for many analysts on Wall Street, but because they get a lot of airtime is because they put predictions on the markets, right? They put, okay, this is going to be the bottom. This is where we're headed. This is what we believe that we're going to go to. This is how high our price target is, stuff like that. But it is incredibly important to always approach the market with this idea that I know that I don't know. That's what some of the greatest investors and, you know, some of the more high-level investors, you know, some of the people like Warren Buffett and Bill Ackman and Peter Lynch have been known to do is that they're a very good understanding of, they know that they don't know the future. And that's what makes investing so incredibly challenging and difficult in the first place, is because nobody really knows. So, but, you know, of course, there's perma bulls and there's perma bears, and the reason why perma bulls at the end of the day win is because markets over the long term have gone up. And so while Tom Lee is incredibly bullish almost all the time, I don't think I've ever seen an interview of Tom Lee where he's ever bearish. It's because 72% of the times over the last 200 years, markets have gone up. And so eventually, yes, he's going to be proven correct. And so perma bears are going to be proven right 28% of the times. Perma bulls are going to be proven right 72% of the times. So if you're always bullish, eventually, yes, you've got higher odds to be correct and look like a genius. And if you are constantly bearish or expecting a crash, 28% of the times you're going to be proven a genius. But our approach, and my approach, has always been a little bit more balanced. And instead of trying to predict, our focus has been more on understanding the risk reward and what we are, what we can expect from a risk reward ratio from the markets and from the individual stocks as well. So that's where we are. Just reading the comments here. Perfect. Loud and clear. Have you placed orders in pre-market like you said you're planning in one of the more recent videos? So Vault, I will be sending out the alerts in Discord very soon. Just going to get done with this live stream in about 20 to 30 minutes, and then we'll just focus on Discord and start sending out some alerts. Is it too late to enter gold now since it's at all-time high, JT? So, I mean, it really depends on what it is that you're looking to do. You know, if you're planning on holding really long-term like I am, you know, for the next several years and decades, then even at 31.22, I wouldn't mind buying. But from a technical perspective, you can see that it's clearly overbought, but the momentum is very strong, and there is a lot of you know, expectations and hype around gold right now. So the central banks, you know, piling money into gold is one of the biggest catalysts driving this rally right now. And of course, with all the uncertainty in the geopolitics, that's also resulting in more momentum to the upside for gold. Are you going in heavy for NVIDIA? So I will be dollar cost averaging at these levels for sure, at 105, 106. I will be accumulating a little bit more. But just not going heavy because I do have other buy targets for NVIDIA. My fair value is, in fact, closer to 105, 106 right now. And my heavy buy target, I think, is a little bit lower than where NVIDIA is trading right now. Tom Lee looks stressed. Yeah. Can you disable the covered call? The subtitles, a horrible feature. Yeah, I know. I don't know how it got, added on. I think maybe because of YouTube or something. There's a new feature that they added. So I know a lot of my videos were having different dialogue or dubbed audio. I need Tom Lee to hug me so I can survive this bloodbath. Has Tom Lee ever said anything bearish? Not that I know of, right? And that's what happens. And I've talked about this in my previous updates as well, because I think the best way to approach the markets is in a very balanced overview, right? We have to understand that there's uncertainty. We have to understand that there is a lot of fear and pessimism in this market. And you know, it's kind of funny that I was thinking about this the other day. I was like, if I ever, let's say, make an appearance on CNBC, for example, this is a hypothetical example. I know I'm crazy, but if I ever, and they ask me a question like, where do you think the markets are going? Like, I want to be the person that says, I don't know. I want to be the person that clearly says, I do not know, because I really don't know where the markets are going, where S&P is going to be a year from now, where interest rates are going to be a year from now, where Bitcoin is going 6 months from now. So, and that, I think, is going to be the most true, most honest answer that anyone's ever given, because we really don't know. Even collectively, we do not know. And I think so the best approach for us is what can be done today, right? What is the risk reward looking like, while fully understanding that there is a possibility for new lows, there is a possibility for a bigger sell-off. 6 months from now, we could be in a recession. 6 months from now, we could be at an all-time high, and the economy could be flourishing. Those things are, both of them are equally possible, right? In this world of many possibilities. And so it's just, I've always approached investing in a way where I don't have to predict, but instead look at the risk reward where we are on a current market basis, and then find opportunities and invest accordingly. So JG says, but nobody wants to buy and then watch it go lower, so it's very hard to change this mindset. True. I mean, true, but that, then you're expecting for an investment to never be in red. And the probability for you to never be red is practically zero. In your investing career, if you're making a lot of deals, if you're investing a lot into stocks or real estate or options, it is impossible to have a 100% track record. I think George Soros once said this, that it does not matter whether you're right or wrong. Who wants to finish this quote from George Soros? He says, and I quote, "It does not matter whether you are right or wrong." Blank. Who wants to finish this quote? I want to see in the chat. We got almost 200 people watching. I'm sure someone's heard of it. I believe it was George Soros who said this. It does not matter whether I'm right or wrong. What matters is blank. So let me see if somebody can get it in the chat. A says you just need to get good. No, that's not what he said. Yeah, so Roland says, but how much money you make when you're right, and how much money you make when you lose. How much money you lose when you're wrong. So that is what he said. He said it doesn't matter, whether you're right or wrong. What matters is how much you make when you're right and how much you lose when you're wrong. And that simply means you want to be cutting out your losers quickly. You want to approach investing in a very defensive way where capital preservation is incredibly important. So cutting out your losers, being very proactive and understanding the story and how it changes, and then letting your winners run. Oftentimes in investing and trading, we do the opposite. We hold on to losses and then we cut our winners too early. But instead, long-term investing, very much focused on letting your winners run as much as they can and cutting out your losers very quickly. And when it comes to volatility, volatility is just the price you pay to invest in the markets. It's always going to be there. There's no way to avoid market fluctuations and price fluctuations and volatility. So if it's hard to see a stock price go down after you've bought it, then that's just maybe maybe that stock is not for you, or maybe investing in general. There's less volatile ways of investing in the markets. So yeah, just wanted to add that. Walt says Peter is the GOAT. I like his opinion on diversification. I agree. I think Peter Lynch is somebody that has taught me so much, from his books and from his videos and podcasts and mentorship on YouTube videos. There you can find so much from Peter Lynch, and I highly recommend you guys read some of Peter Lynch's books, and even Howard Marks, The Most Important Thing. Incredibly useful book. These are things that are going to open your mind to the world of investing and really help you. Okay, so yeah, just wanted to come on live for a little bit. I might do a market open live stream as well, but just wanted to be live for like 20-30 minutes to go over a few things. We got Microsoft lower 1.6%. We got Tesla, down over 6% right now. We got Amazon also selling off, down to now under 190, down over 2.2%. Meta is lower, down over 2.3%. We got Apple here down over 80-90 basis points. We got Nvidia down about 4%, and we got Google down over 1% as well. So that's going to be it for today, you guys. I might go live during the market open as well. I'll see, what my schedule looks like in an hour. But again, just wanted to spend some time with you guys as the markets are selling off, give you some nuggets of information to think about. So once again, thank you so much for joining. Drop a like, subscribe to the channel, and I'm going to jump into our Discord, answer questions there. Share a lot of support resistance levels for a lot of individual stocks and companies, and then of course send out some alerts if I'm planning on buying and deploying capital on the day, as volatility also is higher. It is now back over 24. So when the VIX is high, for me, it's always been the time to buy. So thank you so much. I'll see you guys in Discord. Happy investing. I'll see you all in the next video.